Welcome back, K-2s. Welcome back to the K-2 Financial Health Channel. It's good to have you here. If you're new to the channel, you like what you hear during this video, I'm going to ask that you like the video, share this information with someone you care and love. Hey, they can use this information to their advantage long term, so can you. K-2s, welcome back. Guys, how did your 2024 go? How did it end? And another question, how is your 2025 going so far? Okay, very important questions I want you to ask yourselves, okay, going forward. How are your goals looking for 2025 already? Okay, this video, we're going to talk about some very important things as what I'm doing, and you can kind of follow along. I'm going to share my actual Roth IRA with you guys. So there's no jive in 25, guys. That's my theme in 25. No jive in 25. For you young people who don't know what jive is, hey, you got access to a smartphone? Google it, okay? So, hey, it's like this, guys. No foolishness, no fool talk. I'm gonna go ahead and debunk some myths that you guys have heard before. I'm gonna talk about some good topics, guys, for you guys to understand. We're gonna get all into it, okay? In a few minutes, I'm gonna go down the list of the titles of the videos I'm getting ready to release to you guys. So no jive in 25, guys. I'm going to go ahead and be transparent on some things I've been doing. I'm going to take you guys, one particular video, I'm going to take you guys with me on a ride along, what I do every day on my grind, 16, 17, 18 hours a day. I'm a 57-year-old man, so I'm going to challenge all you young folks out there to keep up with me, okay? To see if you can do it. Okay, that's going to be a challenging video I'm going to release here pretty soon as well. Okay, so I'm going to release some videos, guys, that's going to make you think and make you ponder where you are in your financial journey. Okay, so let me tell you guys something. Again, if you're new, thanks for joining me. K-2s, welcome back. When I first started my journey, guys, it was back in August of 2013. I was a route driver out of Minneapolis. I would go through the countryside on my route truck, you know, doing my stops, my routes, my deliveries. I came upon Dave Ramsey on the radio. Up until that point, I didn't know who he was. And I was in $40,000 in debt. After I encountered Dave Ramsey on my radio station, the rest is history. You know, and one thing I realized going through this process, guys, and I didn't realize it before, is that you can actually love or like someone even though you disagree with them. Okay, you can vibe with them and listen to them and adopt their philosophies, even though you don't agree with everything that they're all about or what they do or where they're from. Okay, me and Dave Ramsey could not be any different. Okay, he's white, I'm black, he's country. You know what I'm saying? I'm from the city. I'm a city kid. You know, he's a hey. These are Dave. You know, these are his words. He's a country bumpkin, and I'm a city dude. You know what I'm saying? So he likes country music. I'm a hip hop guy. You know, even though I love all types of music, hip hop and rap is my baby. So, but it's okay. I learned it's okay to disagree with people. Okay. Now, recently I've heard some people I follow on YouTube, some of my guys that I look up to. I respect these guys, but you know, some of these guys are talking about some things that I disagree with. So I'm going to talk about some things. I'm going to talk about some of these things also, guys, in upcoming videos. One of which is money can't buy happiness and money can't lead to happiness. Okay, we're going to talk about that. Okay, I'm going to tell you guys specifically. I'm going to break it all down to you guys and tell you how money can lead to happiness. If you understand, you know, if you put certain parameters in place, right? Like the 4 pillars of health. We're going to talk about that video. The 4 pillars of health. It's astounding to me that some of these guys are just talking out of their mouths, talking out 2 sides of their neck, and not addressing or even understanding what the 4 pillars of health is. Okay, so you can't blindly say money can't lead to happiness without addressing that. Okay, some other titles of videos you guys are going to hear. You guys be patient with me. I'm going to show you guys my actual numbers on my Roth IRA in a second. Hold on a second. So the actual videos, titles you guys are going to see. The Power of Gratitude. How to win with money making only $5,000 or $500 net. Going back into the past to adjust your future. Breaking down the difference between finances and money. what does a fat guy running have to do with finances? Why does black people struggle so much with money? And another video, if black folks could write to their ancestors, what would that be and what would that sound like? Well, real talk from a guy that's from the hood on welfare, grew up, conquered obstacles, got out of debt, and now building wealth. His story. Some of the titles that I got for you guys, got them all lined up. I want you guys to stay tuned because I have a lot of information I'm going to bring to you guys. Again, if you guys, before I jump into my Roth IRA, if you guys out there that need help, I have what I call my 15 minutes with coach session. I'm 57 years old, guys, and I'm still grinding 16, 17, 18 hours a day. Why is that? I started at 45, okay? And one of the reasons why I started this channel is, well, 4 of them, is to share my story of getting out of my debt-free story and now building wealth, to inspire you guys, to educate, and to give out hope, right? To give out hope to people out there like, I'm thinking you guys are like me when I started. I needed help. I needed information. I needed someone that can show me the way, inspire me, and push me, and to give me hope. And it started with the hope. Dave Ramsey gave me hope, and I took it from there, guys. Okay? So I want to let you guys know, every time I talk, it's about time. I'm talking to you young people out there. It's about time. I can't help you if you can't help yourself. All I can tell you is start now. Don't wait until you're 45 like me. I'm grinding and doing a good job, but I'm still grinding, guys, sometimes on the weekend. It's nonstop because I have a goal, a dream, aspirations. I have a target date, okay, that I'm shooting for, okay? And I'm going to talk more about this when I show you guys my Roth IRA, and you're going to see what I'm talking about, okay? So, again, I want you guys, if you need help, get a hold of me. I have my Facebook page available. I have my Instagram available. What I'm going to do on this particular video is drop my personal email. So if you guys want to get a hold of me that way, you can. Again, I don't have a lot of time. I've set aside 2 hours a week to help people out there that may need my help. In honor of my mother, some of you good long-term subscribers know, my mother passed in June of 23. And to honor her, she was a great giver. She would give off the last shirt on her back. She would give off the last dollar in her pocket. She would help people. She loved to help her kids, her grandkids. And so, and to honor her, I want to be able to help people pro bono, free of charge, but also it's a voluntary voluntary empowerment for me. It's to go out and help people to honor her. Okay, so if you need help, you're welcome to get a hold of me. I'll leave my personal email in the description box down below. Okay. Also, on my Facebook page, if you guys are thinking about where you are mentally, I have in my Facebook page, on the top of the page, go in there, hit my logo up top. Inside that logo is what I call a financial savvy test, right? It's 10 questions. If you're interested, go check them out. They're multiple choice. It's kind of a fun exercise. Go see where you're at, okay? Now, when you get done, get a hold of me because I got the real answers, okay? Also, for those of you out there who may be out of debt, check it out. I got an app called Moomoo. I'm going to talk about that here. I have an app called Moomoo, guys. Moomoo, I got lucky, okay? Moomoo will give you free stocks. You sign up, download the app, sign up. Hey, it's all you, man. It's pretty simple. You sign up, boom, you're all set to go. They'll give you 15 free stocks, or up to 15 free stocks. When I signed up, I got lucky. I got a chance to get the Magnificent Seven, guys. Free, all right? The Magnificent Seven. You know, who are they? Microsoft, right? Google, Facebook, right? NVIDIA. Check that out, right, guys? So Tesla, right? So I got a chance to get those for free, and they're in my Moomoo app, my investment app. I got another one also, Eli Lilly. I put on there myself. I manage that account myself. So what I'm getting ready to talk to you guys about is my Roth IRA. My Roth IRA stems from when I worked in Minnesota. Okay, before I moved down here to Omaha, I had a full-time job in Minnesota. I have a Roth and a Roth IRA that I have my professional managed by my guy, my financial advisor here in town. He manages both those accounts for me. Those accounts used to be a 401k and a 401k Roth transferred down here now are an IRA and a Roth IRA. Okay, so the company I was working for up there years later instituted a 401k Roth, and that's how I got my Roth IRA. Now, I started contributing up there, but now down here it's going to be maxed out, and I'm going to talk to you guys about that. Okay, so I also have another Fidelity account that I manage on my own. It's more of a passive thing. What I did was I just put in my S&P 500 in there, my SPLG, and my information technology. I think that's going to be the wave of the future with AI. So I have an information technology ETF also in there in my Fidelity account. Those two, and I'm contributing to those, $150 a month on each one. Okay, and so I got that going. So it's just really much a passive thing now. I just keep putting money in there and don't even bother it. Okay. I also have another investment account. So 4 altogether. I have my last one is my Roth 401k at my job, my full-time job I have now. I'm contributing 3%, and also the company gives me 3%. Okay. So, all right, guys. So that's what I have. Let's break into the Roth IRA video I have for you guys. But before that, I have some terms here I want to discuss with you guys before we do that. So what you're gonna hear some terms that I'm gonna use when I'm talking to you guys about my Roth IRA. You may hear stuff like value funds or mutual funds, ETFs, exchange traded funds or index funds, 52-week range, and net expense ratio. The net expense ratio is just basically what a professional manager would charge you for managing mutual funds, for example, right? With my professional managed guy, my financial advisor guy, okay? 52-week range is pretty much just during a 52-week period, what are the highs and lows of a particular fund or stock? ETFs are different than index funds. Index funds are more passively aggressive, passively managed. There's minimum balances that are required for index funds. Index funds are mutual funds. ETFs are different than index funds, that they're index ETFs or exchange traded funds, or just like they're traded throughout the day. They're traded more than mutual funds. Mutual funds are traded once a day. Exchange traded funds you can trade those just like individual stocks. Okay. Now all these have a bucket of funds in there, or a bucket of stocks inside that bucket. All of these have a bucket of stocks in there, right? That either passively managed by a computer, or in the case of mutual funds, are managed by a professional financial advisor. Mutual funds are a group of stocks that are in a bucket, and people pool their money together. Many people and investors pool their money together to invest in a group of stocks in a bucket, and they're professionally managed. Usually mutual funds have higher fees than ETFs and index funds. Okay, so, and usually a financial advisor will charge you to professionally manage your account, will charge you between 1% and 4% in the high. Okay, so those are the terms we use. Also, value funds, guys. Value funds are like mutual funds, but they are like, for example, my guy out there, he's looking at different value funds. Values are different stocks, maybe, for example, or funds that he sees as a low value that he can see down the road in the future that's going to increase in value. So at this point, they're devalued. So we call them value funds. So he's taking a chance on those to see down the road if they can grow in value. So those value funds, mutual funds, index funds, and a little bit about ETFs, the 52-week range, and the net expense ratio. Okay, let's get into the Roth IRA now. Okay, guys, so let's get into the Roth IRA, and here we are. Let me put myself down here so you guys could see. Let's go through this here now. This is my Roth IRA that I have at Fidelity. You see my balance up top. Right now it's $19,002.41. The line down below is green. For the last 2 days, that line has been red. The stock market has struggled the last 2 days. Last 2 days being Friday and yesterday, Monday. Today is Tuesday. Today we got a little bit of a rebound. So it's green today. Green means good. red means bad. Red is a negative day, green's a positive day. But to be honest with you guys, I really don't care. I don't care if it's green or red. A lot of times it's good if it's red, if you're dollar cost averaging, which means if you're investing your money on a consistent basis per week or per month, that you can get some value out of those red days, guys, by accumulating when the stock or the stock market drops in value. You can go in there and get some good value out of it and make some gains out of it. So really don't matter to me. I'm going to dollar cost average all the way up until I'm 60 years old anyway. And then at that point, when I'm 60, I'll be able to sit back with my financial advisory guy and kind of make some decisions where I want to go, and then look at my goals and where I'm at and make some decisions from there. Okay, so here's the Roth IRA. You see this right here, this little graph here. You go all the way back to a month ago. You can go all the way back to 3 years and see how this particular Roth IRA has performed. You can go all the way back there, so you can kind of see how it's doing. All right. Okay, so let's go down below. So what I invest in, guys, at my Fidelity account with my professional manager. Again, I told you guys about my Roth. My Roth I have out there it has significant amount of more money in it than this account. Okay, but we're talking about a Roth IRA. This is my second largest account. Inside these IRAs, I have what I do 4 different type of investments in the mutual funds. I do international stock. You see down there where it says asset allocation. See that foreign stock? That's my international. It's divided between 4 different ones. They're international, small growth or aggressive growth. Those are your small emerging companies. Facebook used to be one of those back in the day, your aggressive growth companies. They're very volatile. They're real high one day, real low the next. Some companies don't make it, of course. Some companies do make it, like Facebook used to be, I believe, one of those companies. So I invest in small stock or small cap, aggressive companies. I invest also in growth, which is your medium cap companies, mid cap. I also invest, guys, in growth and income, the big boys, the blue chip companies, right? Some companies that give out dividends, like McDonald's, AT&T, those kind of companies, Walmart. Okay, so those who I invest in. All right, so up top you'll see I'm going up. See that right there where it says 2005 up top of the screen? It has an $8,000 limit. So if going back to, not sure what it's going to be in 25, but in 2024 the limit was that you can invest in Roth IRAs was $7,000. Now, if you're over 50, like I am, you can invest an additional $1,000. So you see that right over to the right over there, $8,000 limit. That's what I'm going to be maxing out at, guys, $8,000 since I'm over 50 years old. Okay, so there you have it. Let's go into the positions here now. Inside this thing, you can see what's in there, right? Here are all the different positions I have inside my Roth IRA. Okay. As I kind of go through there, you can take this page and go over here and get some more research done if you want. If you're looking at it to see what it's all about. Okay. These are the values. See that column right there, values. These are the values of each one inside that Roth IRA. See that one in the middle, that big one, that $5,264.91. If you scroll over and see that next column, it says percentage of account. That one, this is an S&P 500 too, guys, by the way, IVV. That IVV represents 27.71%, guys, of this Roth IRA. And as I scroll over, you'll see I have 9 shares of it, okay? And then, so we're gonna dive off into this thing, okay? So let's go ahead and do that. So if I have time, we're gonna show you guys 3 or 4 of these things. Let's go ahead and dive into the S&P 500, the IVV. Okay, so let me put myself up here so you guys can see. So up top, you'll see it's the S&P 500 ETF. It's worth $584.99 per share. Down below, you'll see where it says Roth IRA details, total value, $5,264.91. Shares owned by me, 9. The average cost at the time was $581.25. That's times 9 equals a $5,000 plus there. Down below, you'll see the total gain and today's total loss. So the total gain was this year's gain so far. Like I said before, Friday and yesterday were tough on the market, man. Today we had a little rebound. You see today's gain was 13%. Okay, so let's go ahead and do some further research. Let's go ahead and hit the, I'm going to take myself down here. Let's hit the research button. Now, we talked about the net expense ratio before. This particular S&P 500, and I want you guys to remember, the S&P 500 represents the top 500 companies in the stock market, okay? That's what the S&P 500 is. It's Standard & Poor's 500, it's ETF. Now, the net expense ratio, again, is my financial advisor, what he's going to charge me for professionally managing this particular fund. And that represents 0.03%, which is 30 cents per $1,000. So not too bad. Of course, I remember me telling you guys earlier that professional advisors will generally charge between 1% and 4% on the high. Okay, so let's go over here. Let's see. Let's drop down here. All right, so going down here, see those 2 lines down there, that second line, guys, this is your 52-week range. Okay, so again, that represents the highest this particular fund has been during that period of time, and the lowest. The lowest has been $472.11, and the high was just achieved a few days ago, I believe, $612.09. And right now we've kind of scaled back a little bit to $584.99. So that 52-week range, guys, whenever you guys are ready to, when you get out of debt and you get ready to build some wealth, man, and you try to figure out what are your mechanisms for building wealth, and you want to, study individual stocks, mutual funds, index funds, ETFs, that kind of thing. And you want to be able to look at your 52-week range and to see how that particular fund or stock has been doing. That's a great tool for you guys to go in there and see. And that may help you out determine which one you want to choose. Okay, let's go up to the back. Let's go up top here to the graph. See that graph and my line going back and forth? Okay, so let's go ahead and talk about this. This particular S&P 500 ETF, you guys, now, up top there, where see that green up there? Okay, and I want you guys to stand by. Some of you older guys, experienced guys, stand by. I know you guys know some of this already, but let me help some of the new guys out that don't know, that's going to follow me in what I'm trying to do. Okay, so those up there, guys, you may look at the 1 day out. It's got the 1 day out to show you what is done in 1 day. It's got the 5 day, show you how this particular fund is done in 5 days, all the way up to 5 years. And you may look at this and go, 1 day, dang, K-2, man, this stock is doing terrible. I mean, it was at 587 over here, but now it's only down to 581, whatever it is. Hey, when you guys look at this, look at this as you're going up in the sky. At the higher you go up in the sky, you're going up to a 30,000-foot view in the end. You're going to look downward and see how this particular fund is doing. At the 1 day mark, you're down like a house level, right? At the house roof level, right? But as you go up to 1 year, 5 year, you're going up into the sky. You're going to see how the particular stock is doing. Let's go to 5 days. And kind of the same, right? But let's go out to 1 year. See how things have changed? Now you start to get a broader view of how this particular stock is doing, guys, as you go up into the air, right? Okay, so over here, January 16th, over here, see how that stock has done? January, not the 16th, but January 2016. That particular stock was at $474.62. Now, fast forward, way over here to 2025, right? Now that was 1 year out. So look at this stock, right? Check it out. So over here, last year in 2024, it was trading at $474.62 in 2024. All right, in January 2024, just last year. In 1 year, that fund, S&P 500, has gone to a high of 610 a few days ago, back down now to 584. Okay, so let's go to 5 years out. Look at this, guys. Let's go to 5 years out. Look way back in 2020, man. Look at that. It was at $231. Now it's all the way up here, guys. Now it's all the way up. Just a few days ago, 610. Now, like of course, now it just scaled back to 584. Okay, so in 5 years, it went from 231 to where it is now. Okay, so let's go to another one here. All right, so let's go to this one. This is a FVAL. It's a value fund ETF. Let's go down below where it says the Roth IRA details. I have 46 shares owned by me. Average cost of those shares is $61.34, equaling $2,837.28. Okay. All right. Let's do a little, go back to the research here and see the net expense ratio. The 0.16 is $1.60 per $1,000 owned for this particular ETF. So that's what my financial advisor is going to get per $1,000 owned by me. So let's go to the down below. See the 52-week range. The second line again down below. Trading at $51.95 for the low. The high, $64.49. Okay. Let's go up top. You see up there the graph up there. The 1 day when looking too good. You go to 5 days out. 1 day, 1 year out. 1 year out, you can kind of see you're going up in the sky to take a broad view of that. And you start to see how this particular ETF is doing, right? Go 5 years out and look at that. Back in 2020, it was at $25.01. Now, 5 years later, guys, it's trading at a high just a few days ago of $64. Now back down to 61. So you can see how this particular ETF is doing. I feel pretty good about this particular one. Let's go back over here. I have, let's see where I'm at. Let's go. So I got, where am I? Let's go here. Okay, so you can guys kind of see how it's doing. Like I said, it's $1.60 per $1,000, not too bad. So there's your 52-week range. So I feel pretty good about this one. Let's go to another one. This one over here, I'll share this one here as well. The DYNF. This is equity. Total value of $1,526.70. I owned 30 shares of those at an average cost of $50.65. Look at today's gain and today's gain, total gain in today's gain, guys, down below here. So the stock market came back again today, pretty strong. This one here is the net expense ratio on this one is 0.27, a little more, getting more expensive for my taste. $2.70 per $1,000. Let's go over here. Down below, 52-week range is pretty decent on this one. You want that little pinpoint down there in that second line, guys, be to the right. You don't want it to be to the left. If it's to the left, you got to think a little bit. If it's to the right, okay, you may be doing okay on your 52-week range. $39.07 to the left down there is a low. $53.50 is a high. So and it's kind of scaled back the last few days to now $50.89. So not too bad. Let's look at the graph up top here. 1 day out. Okay, not too bad. Let's go 1 year out. Now you start to see a good picture, right? How this particular fund is doing. Let's go 5 years out. Okay, 5 years. Looking back in 2020, guys, it was $19.89 per share. Now all the way up 5 years later to $53. a few days ago, now down to $50. Okay, so not bad at all. Hey, I feel pretty good about this IRA, man. I'm gonna ride this sucker out, guys. I'm gonna dollar cost average. I'm gonna always be buying until I'm 60, and then I'll make a decision from there. So I feel pretty good about this. The way this particular Roth IRA is performing, I'm feeling pretty good about it. Had a great year last year. But I tell you, there's some troublemakers on here. Let's go check it out. There's some troublemakers on here. Let's go down here. Let's see where I'm at. Let's put myself up here. All right, so this one here is okay. It's just okay. I'm gonna go up to the graph up top, let you guys see that. So you see that right there. It's just, you see the 5-year graph on that up there, guys. It's doing okay, but it's so up and down and scattered. See, I'm looking at a lot of these, and if I get to I see my financial advisor guy once a year, and so some of these I'm gonna watch. I may change some things on here, guys. Some of these I may not like. Let's go back to my summary, and I'll show you guys my asset allocation. And you see that foreign stock down there represents 24%. I may change that. You know what, guys? I'm thinking about just getting rid of foreign stock altogether, my international, and going all domestic, and putting all those into. I'm going to be as aggressive as possible, guys. I may put a lot of that into my aggressive growth, my small cap. Okay, guys. So there you have it. That's my Roth IRA. If you guys have any questions, you let me know. So let's get back to the video. Okay, guys, so there you have it. There's my Roth IRA. Wanted to show you guys that, and every now and then I'll show you some things I'm doing to be completely transparent with you guys. I believe that's important, not to boast and brag. It's not about none of that, but that show and tell to show you that what's possible, what can be done when you're starting like I did back in 2013, a low of $40,000 in debt. Now I'm getting myself in order out of debt and building wealth. What's possible when you can build wealth, guys? Because when you don't have nothing dragging you down, when you don't have no debt, every little penny you pick up on the street, every little penny drives your net value, your net worth up and up and up every day, okay? And that's what's possible. When you start investing, you can start to see some fruits of your labor, okay? So it's not to show off or anything like that, but what I said before is to give you guys hope out there that may need it. Okay, so that particular IRA, I got good hopes for. I would like to, and again, guys, disclaimer: there's nothing, set in stone. All right, there's no gimmies. Okay, there's no this whole thing can go to hell in a handbasket, right? And your stock market goes crazy, and this thing can go to zero, just like that. So there's nothing guaranteed. But from the inception of the stock market, it has generated 10% or more every 15-year period. So I feel pretty good about it on the history of it. So, and I say all that to say this: that particular IRA, I got good hopes for. I can't guarantee anything, but I would, from my perspective, I'd like to see it at $100,000 within 5 or 6 years. Okay, so there you have it, guys. There you have it. There's my Roth IRA. Again, stay tuned. I'm going to be dropping out some videos to you guys, some real good information to you guys the next few weeks here. Stay tuned. I got them all lined up for you. All I got to do is edit them and get them all out to you guys, okay? You have any questions, you need any help, the links are down below, okay? Moomoo, get your free stocks. I got mine. Get yours, okay? Sign up. Get going, okay? To give you free stocks, I'll leave the link down below. Again, guys, thank you, K-2s. You're back in the flesh. Let's have a great 2025. If you're new to the channel, I ask that you share this information with someone you care and love, that they can use this information to their advantage long term. I like the video as well, and YouTube will share this information with someone. If I get more likes, get a bunch of likes, they will share this information with someone maybe just like you that may need to help from this great financial literacy information from someone like me who was in debt, was on welfare back in the day. I grew up in the hood, grew up, took care of my business, I conquered obstacles, got out of debt, and now building wealth. Okay, I think that's got a lot of great value for you and people out there to see. Okay, again, K-2s, we've come too far to forget who we are. So let's take it to another level. Raise the bar. Only then can we toast to ancestor stars.